You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
All right. Hi, everyone, and welcome to the Daily Currency Call presented by Forex Trading Asia. And thanks to all the LCMS Trader Club members that are coming in as well. Some people might still be on holidays, but if you are on holidays and you're catching the call, I hope you're having a nice, relaxing time as well. And to all the new people that are watching, welcome. And to all the people watching the delay telecast on YouTube as well, make sure you visit the Jindal Thai website and get subscribed to the LCMS Traders Club as well. So again, a quick introduction to anyone that is new here and wondering what is going on. This is the Daily Currency Call presented by Forex Trading Asia, and it's episode 449, and it's the 4th of January, 2022. And in the Currency Call, we analyze the currencies as follows. So we've got Aussie and Kiwi on Monday, we've got the Euro on Tuesday, Wednesday, we have the pound, yen and gold for Thursday, and then on Friday, we've got CAD and cryptocurrency. And in the Currency Call, we'll discuss the market economic updates, and there's a few things to discuss today as well with Kim Hong, currency strategist at LCMS Traders. We'll also go with the currency pair in focus. We'll discuss the key support and resistance levels. We'll go through trade ideas and, of course, much more. And we endeavor for the currency call to be very beneficial to both the long-term investors and short-term traders. And here we will go through what could move prices, discuss possible trade ideas, and we'll highlight the potential targets and risks. Finally, a disclaimer: any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering into any trades. And in regards to market economic updates, we do have Kim Hong here just to discuss the FOMC meeting that's going to take place on Thursday morning at 3 a.m. GMT +8. So to get prepared for that, we've got Gimme here now. So over to you now, Gimme.
All right. Thank you, Scott. Welcome, everyone, again. Okay, so US FOMC meeting minutes. Will there be any surprises? Answer is no, there won't be any surprises because we have already received, the surprises that we have had, okay? But not too big of a surprise, okay? But previously, the Federal Reserve during the December's meeting, okay, they actually double up the pace of QE tapering, which is a very hawkish move, all right? And because of that, QE tapering is expected to end in March 2022, this year, okay? So at the moment, I think the quantitative easing is being run at 90, I think it's $90 billion per month, okay? And then during this month's meeting, February's meeting and the March meeting, all right, the central bank will be tapering $30 billion each month, all right? And hence, by the end of March, we, or rather the Federal Reserve will no longer be purchasing any more bonds, okay? That means QE has ended, which is a good thing, okay? So if that's the case, why do we still need to pay attention to the minutes, okay? It is still important, all right? Because you guys know what comes next after QE ends, right? Interest rate hikes, okay? So, based on the most recent released economic projections by the Federal Reserve, many of the members actually expected 3 rate hikes, okay? If you guys remember, back in December when I actually did a post-FOMC coverage, based on a dot plot, many of the members are actually expecting an earlier interest rate hike, okay? With some of them expecting 3 rate hikes this year. So that is, once again, a very, very hawkish move, okay? So, with them actually, the dot plot, there's only so much the dot plot can show, okay? It shows how many rate hikes is being expected, are being expected from the members, committee members, okay? But we do not know when, okay? when in terms of like, which month will it be held at, okay? Because remember, 2022, like I was sharing with the club members during yesterday's evening session, okay, that 2022 is a year of interest rate hikes. If the central bank is not hiking interest rate, is not planning to hike interest rate this year, it is definitely falling behind, okay? So 2022 is a year of interest rate hikes. Hence, it will no longer be too big of a surprise that central banks hike interest rates. Now, the concern will be, when will they hike interest rate? Who will carry out faster than the other central banks? Of course, the fastest one, out of the 8 major central banks that we are looking at, okay, is the Reserve Bank of New Zealand, okay, which actually started its 0.25% hike last year. All right. So next come the Bank of England, okay, in December, a surprise 0.15% hike. All right. And then next, who will it be? Okay, will it be the Bank of England again? Will it be the Federal Reserve, or maybe the Bank of Canada? Okay, it's pretty much like the race towards who's going to hike interest rate the fastest and get to policy normalization, get to the pre-pandemic level interest rate levels, okay, the fastest, okay. So with that, okay, what we want to pay attention to in the meeting minutes, okay, is simply any clues that the Federal Reserve members, Paul Wall himself, give us on regarding the timeline. Okay, not timeline, but exactly when will interest rate hike be taking place. I mean, they may not actually say like, we are going to hike interest rate in April or in September and things like that, okay? But they may actually sound hawkish, okay, by saying things like, all right, by saying things like, as soon as QE ends, okay? We know when QE is going to end. As of now, QE is, the intended ending month is March 2022, right? So, if we get something like as soon as QE ends, then we can actually expect something as early as April or May, okay, depending on when the next meeting is after the March meeting, okay? So, yeah, with that, no surprises, okay, no surprises, but we can actually expect some form of hawkishness, okay, if they were to actually give us more details on when, on how fast interest rate can be hiked, or better still, when will it be? Okay, so expect some movement. I would say expect some movement in the US dollar. So you guys have any trades, try not to hold it past the 0.300 GMT plus 8 on Thursday. Okay, because who knows, what surprise. Well, no surprise, but who knows what hawkish tone will the central bank send out this time around. Okay, so with that, I will actually be updating you guys again on the minutes on Thursday's currency call, okay? If there's no questions on the minutes, I think it's pretty straightforward, okay? Then I'll hand it back to Scott for the dollar index.
All right, thanks for that, Gimme. And we'll just get straight into it. So there were some movements on the US dollar index as well. So what I will take note of is that, and I was just going through the Aussie, which did have quite the pullback last night as well. But just on the daily time frame here, we've got a movement above 96, quite a strong bullish candle, and it closed, well over 96 as well. And if we go down intraday just for the 1 hour time frame, I'll just zoom out a little bit. You can see now we have encountered a little bit of selling into, I think the high we got to maybe was 96.30, and we have seen some selling there previously. And what we might see is what Gim's mentioned in the lead up to those FOMC minutes. We could very well see a bit of range bound trading, but a little bit of news to discuss for tonight as well that could offer a catalyst for some more buying of the US dollar as well. So pretty uneventful last night in regards to actual news, but we definitely just saw some inflows into the US dollar. And what that tells me is that mid 95 level is definitely good value from a buyer's perspective, because it was bought up quite quickly. And if we just go now for later today, and we'll just focus on the US news. So we do have the ISM manufacturing PMI coming in, This was discussed yesterday in the currency call. If you didn't catch that, make sure you do rewatch that. Just an explanation on, what to expect out of this and why it's quite significant. Still over 60. I mean, if this holds over 60, I see that offering some support. Now, I don't see it really offering a great catalyst to push it through 96.30. I just think it holds above 96 until we get those FOMC meeting minutes announced. And now that was 3 a.m. GMT +8 time zone. And then in the lead up, we do obviously have the NFP as well. I think if I just cycle down now, we do have another. So this is Wednesday. So tomorrow night, this is 9:15 in the evening. Again, GMT +8, the ADP employment change. Now, it is down as a high impact news event. We'll just see if it can get close to the expected value there of 413. Previously, it was 534. So it's going to be interesting to see if that employment change holds in correspondence with what is expected, or if we do see, like we've seen obviously with NFP figures, some very unexpected results. So that's something to look out for Wednesday. So again, just patience is required and keep the trade short as well. But if we do see that close to 60 or even a bit above, that could offer a nice catalyst for the US dollar. And ideally, we see it pull back a little bit too, would be really nice, closer to 96. I don't really like to buy into the breakouts right now in this situation, just with how markets are. Try and get a bit better value if you can. So it's going to really require something dramatic today and tomorrow to see this US dollar run, I think, through 96.30. I just think playing the ranges is probably best with a short-term focus. Now, that are my thoughts now for the US dollar index. Now, we do have the euro analysis here with Kim Hong, currency strategist. So make sure you do take some notes. I will be sharing the trade ideas as well. So over to you now, Gimme.
Hi again. Okay, so euro dollar. Let's jump straight into the chart. Where's my okay? So euro dollar. Like I've shared with the club members yesterday, okay, euro has been pretty, I would say, weak. All right. Basically, okay, the main idea is this. All right, the European Central Bank is not doing as much as the market wants it to do. Okay, that's one of the main, I would say, downside of the coming in from the euro. Okay, because we've seen many central banks actually hike. Sorry, not hike, but tapered QE and things like that. But the European Central Bank has just only started like recently, right? Okay, wait, let me check. Can you guys see my screen? Hello there, Scott, can you hear me?
It's still loading up. It's still got Gimme hash started.
Okay. Okay, good. So I didn't really hear much from the European Central Bank, okay, for the whole year, okay, except that PPP will end in March this March, okay, 2 months down the road, all right, and then after that the central bank will actually increase the amount of bond purchases under the APP, the SS purchase program, and then after which they will actually tone it back down. The APP, bond purchase under APP, will be carried out at 40 billion euros per month, all right? And then it will tone down to 20, okay, for the third quarter, before coming back down to the, what is that, 20, the current pace of 20 billion euros per month from the fourth quarter onwards. And it's not only for the fourth quarter, okay? What is being stated is at least until the end of the fourth quarter, okay? So what this means is that it may actually stretch to 2023, okay? Which is not a very good thing. Now, if they were to actually end the whole QE in 2022 this year, okay, then of course that's good news, all right? But unlikely is going to be the case, okay? Because from the way how the European Central Bank works in the previous years, okay, more often than not, it's going to be more draggy than, in terms of quantitative easing, okay, it's going to be more draggy than then swift and decisive like the RBNZ, okay, which just end QE at one go, okay? So because of that, we actually, okay, if you guys can see this red vertical line over here indicates the 4th of Jan, which is actually pretty much the first, probably the first trading day of 2021, okay? And then till now, it's the 4th of Jan 2022, okay? So as an overall view, okay, we can see that the euro has been weakening against the US dollar basically for the whole of last year, all right? We have heard many things from the Federal Reserve, okay, in terms of starting from inflation being transitory and things like that until the fact that, we admit that it's no longer that transitory anymore, okay? And we feel that the inflation is a bit of a pain right now, okay? So, which is why, the central bank decides to double up the pace of tapering, okay? And, like I mentioned just now, we didn't really hear much from the European Central Bank, all right? So, and you guys probably know already, right, by now, monetary policy is pretty much the main driver of how currency move, okay? And because of that, all right, it's clear that the Federal Reserve is more hawkish than the ECB, okay? Hence, you see, we are looking at the whole year of the declining of the euro against the US dollar, all right? So as of now, what's my view on euro dollar? Okay, is it going to be like a bullish or is it going to be a bearish view? All right. Personally, okay, my take is this: since the mid-November, or rather should I say, mid-November, around like 16th or 15th November, okay, it has actually been ranging across within the 1.2, the support zone of 1.12 and the resistance zone of 1.14. Okay, it's trading very low. That's what that's what we can all see from the chart. All right. So will it actually go lower? Likely possible. Okay. Why is that the case? Once again, dovish policy tone from the ECB. Okay, and the US side of things, we are already expecting interest rates coming in this year. Okay, that will definitely pose a downward pressure on the euro dollar. All right, and you see, okay, let me just zoom in. For the past, well, I wouldn't say for the past, but from 31st of December 2021 to the first trading day of this year, okay, the 3rd Jan 2022, okay, we actually see a rebound, okay, a rebound from my resistance zone of 1.14, okay, and right now my take is this, okay, I'll be looking to sell euro dollar if it breaks below the 1.13 level, okay. Let me just add a line to show you guys where's the 1.13 level. What's so special about this level? Okay, basically it's a round figure. Okay, it's a round figure. It's a key level. It's a psychological level. However, we're going to call it. All right. But basically, long story short, it's a level that people, market participants, traders, investors will be paying attention to. Okay. So as indicated by this horizontal line, okay, it's the 1.13 level. Right now, it's trading at 1.12996, like testing the key level, I would say. Now, if it were to break below this key level, okay, there's a good chance that it will actually trade towards the 1.12, okay? Well, maybe before 1.12, all right, which is why, okay, if it breaks, I would probably set my take profit level at the 1.123 or 1.122 level, okay, if you guys are more aggressive, okay, but I'll probably go for the 1.123, okay, because the 1.12 level is really very low, okay. If you were to look at the weekly chart, when was the last time you actually traded to that low? I mean, that's back in 2020, June 29th, okay, it's like 1.5 years ago, okay. So selling opportunities, okay, for euro dollar if it breaks below. Now, how long should you be holding this trade for? Okay, keep in mind, like what Scott mentioned earlier, okay, the FOMC will actually be releasing the meeting minutes, okay, on Thursday at 0300 GMT plus 8. My view on that, okay, is probably going to be, positive tone coming from the meeting minutes, okay, especially if we were to receive more clarity, okay, more details on when will the central bank actually hike interest rates, okay? If let's say the minutes is going to be like some non-eventful release, nothing much has been shared. It's just saying that, more members are expecting 3 rate hikes this year and things like that. Then, we are still likely going to see euro-dollar trend downwards, okay? Because of the overall trend being downwards, because of, the more dovish side of things coming from the ECB and things like that, all right? So euro-dollar is my view is definitely going to be a bearish view on it. All right. So when we look at euro dollar, we have to, when we look at euro, okay, we have to look at the euro pound as well. All right. So, oops, wrong chart. Euro pound. Let me get the one with the yellow lines. Okay. Euro pound. Where is my, let me just put a vertical line on start of the year. Where's the start of the year? Okay, this is the daily chart. Okay, so you can see over here, for the whole of 2021, okay, as not surprising, I would say euro pound is pretty much a downtrend, okay, although most part of the year, most part of 2021, we are actually seeing euro pound ranging between 0.84, okay, my support zone of 0.84 and my resistance zone of 0.7, okay. So overall, it's still going to be weak. All right, why is that the case? Euro.
你决定了吗？它再量了，量了就是爬这样回，它就减了。
Let me mute our participants. Scott, could you do me a favor? Could you mute our participants? Thank you. Okay, so like I was saying, euro pound has been ranging across pretty much the whole of last year between my support and my resistance zone. Okay, but okay, chances are euro is going to be weaker than pound. Once again, monetary policy. Euro, nothing much. Bank of England, surprise hike in December, and you guys actually see like how many pips they actually shot up within like the first few minutes of the news release. Okay, so with this whole start of interest rate hike from the Bank of England, can we actually be expecting more from them? Definitely yes. Okay, like the Bank of England has mentioned during their November's meeting. Okay, not much negative impact was actually being done on the jobs market upon the ending of the government's furlough scheme, okay, which is actually a good news. And because of that, and inflation in UK has hit 10-year high, okay, and that has been something that has been a burning issue, okay, for the central bank themselves. All right, so with these two conditions being met, okay, inflation and employment, okay, the Bank of England definitely will be looking forward to more interest rate hike. Will it be this month? Okay, I'm not sure if they are actually meeting this month, okay, but will it be the next meeting that they will be carrying out? Who knows, right? So definitely euro pound, my view on euro pound is going to be dovish. But okay, pay attention to this. It is actually at the moment testing my 0.84 support zone. Okay, now I will be looking for selling opportunities only if it actually breaks below this support level. Okay, the support zone of 0.84. All right, and in a scenario whereby it breaks below, as you guys know, okay, by default, my stop loss level will be above 0.84. Probably 0.843, okay? Knowing how euro pound moves, it's not as much, it doesn't move, it doesn't have as big of a move as the other pound pairs or the other euro pairs, but when you put euro and pound together, yeah, you get small movements. You don't get drastic movements, like the other pairs. That's what I'm trying to say, all right? So 30 pips above the 0.84 support or resistance, okay, once it breaks the support, okay, zone will be a good stop loss level to be at, okay, to set at. Now, what about our potential take profit? I probably have to go to weekly zone to show you our weekly chart to show you guys this the reason why I actually set it at my next support at 0.80, okay, because as you can see, all right, well, maybe I just go to daily chart, okay, because my zones are drawn there, right? So it's probably more clear as well. And you can see, all right, this 0.84 support zone is actually quite strong because there's previously like 1, 2, 3, 4 5, 6, 7 testing, and right at the moment it's probably like the 8th time it is testing this support zone. Okay, pretty strong. Will it break? I'm not sure. Okay, but I'm definitely bullish on the pound against the euro. Okay, but in a scenario whereby it breaks, okay, there's a good chance it will go lower, and then the next level will be at 0.808. Okay, which is where I would set my take profit level at. Once again, like I mentioned, all right, because the move is not going to be drastic, all right, it may take a while for the TP level of 0.808 to be hit. Okay, so you guys, okay, like might want to actually come back to this trade idea if you guys actually take it up, all right, when you guys sell it or something, all right, in the next few days or something, if it actually breaks the support level, because things may actually turn, right, with the whole uncertainty of Omicron and things like that. So the UK, the Bank of England, may actually modify their monetary policy a little, maybe delay, push back their rate hikes and things like that. Okay, and because of that, that may actually cause a temporary rebound, upwards move in the euro pound. Okay, hence your profit may actually, well, be returned back to the market, things like that. All right. So, yep. As for now, my view on euro pound is definitely going to be a bearish one. Okay. Do we have any questions for euro pound and euro dollar? No. Okay, great. If you guys have any questions, as usual, you guys know the drill. Just put your questions in Traders Club and we'll get back to you as soon as possible. All right, with that, I'll hand it back to Scott.
All right, thanks for that, Gimme. I've shared the trade ideas as well, and I'll elaborate in a little more detail just about how to approach those, just with some notes from the currency call guys. So make sure you watch yesterday's episode and obviously today's as revision for what's coming up with the FOMC meeting minutes. Thank you so much for watching and hope to see everyone tomorrow for the pound analysis. Bye for now. Have a great day.